There's a new book out by Mark Minervini, which is Think and Trade Like a Champion, and I've been reading it for last couple of weeks. And this particular review will take you through what are some of the key highlights in the book. As you know, he wrote a book a couple of years ago, and that particular book had details about his methods, and there were a lot of things which were like not completely explained or left out. This particular book is a much better version of his earlier book in terms of it has much better flow in terms of how it starts and how it ends and how it logically builds on steps. The other thing in this book is that there's a lot more emphasis on some of the things like selling, where to sell, and position sizing, which are not dealt with in enough granularity and details in the earlier book. As an active trader or as a trader, as a full-time trader or somebody who does trading as a living, you will find this book very useful because each chapter has nuggets of information from someone who actually trades for a living. So you can pick up a lot of small strategic as well as tactical stuff from this book, and you can incorporate that into your trading. So I would recommend this book for especially for active traders and full-time traders, because this book has a lot of things or the issues discussed which are the same issues which all the traders go through on a day-to-day basis. So let's have a little bit of a look at what all is there covered in this book and what little bit details about each of the chapters, so that you have a better idea as to what's there in the book. So the book has around 11 chapters, and one of the first chapter is always go with a plan, basically, which is like similar to the kind of discussion which we have had many times, which is like you must have a setup, well-defined setup, you must have a process, and then that particular setup and process should also have contingency in terms of like whether the market doesn't act according to your plan, then what will be your contingency, and what does it also gives an example of his own plan as to what does a real plan for trading looks like, which is very useful for somebody who's just starting out or even for experienced trader, because you can look at some of the things a trader has to look at before getting into trading seriously. So that's the first chapter, which goes into go with a plan. The second chapter is basically approach every trade with risk first, which is basically a very good advice, and which is what it really means is that you have to have a plan to mitigate the risk, because as all of us who are traders know that there is constant risk in the market and you cannot eliminate the risk in the market, but what you can do is you can do a better job of planning for it in terms of better setup selection, better stock selection, which is going to reduce your risk. Better risk management strategy is going to reduce your risk. Where you buy, where you sell is going to reduce your risk. How you manage a trade over its life cycle is going to reduce or eliminate risk. And this particular chapter has these details about how to approach a trade with risk first kind of an approach. I don't want to give out everything in the book because then that's not fair to the author, but like this is a chapter which anyone who has got an experience of certain years in trading will appreciate as having something meaningful discussion on how to approach a trade with risk first kind of an attitude. And one of the most important thing, this key to being in this game for many years or surviving this game for many years, is really to not lose big, because if you lose big it is very difficult to dig out of that hole. And you hear stories after stories of people who blow up their account or like basically take wild risk, and then it's an interesting story, but that's not what a professional trader should be ever getting into, because your objective is basically to eliminate risk as much as possible and then make gains. Because if the whole objective of trading, as far as I am concerned, is to make multiples of my money without losing that money. So if you want to achieve that kind of a thing, then how do you approach trading from a perspective of managing risk? That's what is discussed in this chapter, and it has some really tactical details which many traders will find very useful. The next chapter is follows from the second chapter, which is basically never risk more than you expect to gain, which is basically something which is ingrained into most of the traders who are active traders or who are doing this for full time. Is that basically you have to look for a setup where your risk reward is multiples of your risk, in the sense you don't risk 20% to get 5% gain. You have to risk enough. You have to risk basically 5% to get 20% gain, or like risk 8% to get 20% gain, or 12% gain, as against risking more to get less. So that's basically, and there's a detailed discussion on this in terms of like what kind of percentage profitability you should gun for, and why looking at more like say 10 to 10% risk and 20% profit is the ideal way to look at things, rather than trying to gun for like large percentage gains, basically with a higher risk. And some of the things which are constantly discussed in the trading world as to like, and I should put all my account into one trade and just like, and I hold it for long, what is the risk of doing that? Those are some of the issues which are discussed from a very practical perspective. And it also goes into details about some of the tactical things which you can do, which is like one of the most interesting discussion which is there in this is a staggered stop, how you can put a staggered stop in a position where some of the position has part of the position has a larger stop, part of the position has different stop, and third part of the position might be having a tighter stop. So you have a position which like, and it might get stopped out, but your longer term position might still you might still be holding for a longer period of time in the hope of getting a longer term return. And how to add to a trade so that your initial risk is lower, and once the trade starts getting into your favor, then how you add, at what point should you be adding, and if you add, how you should be moving the stops. That's the discussion which is there in this chapter, and I think that's a very useful discussion which is for active traders and full-time traders. The next is basically know the truth about your trading, which basically boils down to actually keeping track of your trades, looking at the trades, analyzing the trades on a continuous basis to look at where your current performance is as against a benchmark derived from your own results. And it is also about basically developing a risk model or developing your own expectancy model based on your actual results versus what theoretical results should be, or what like trading books say a lot of time, because your actual style might be different, and a lot of people develop style which they are very comfortable with. So a scalper might have a different expectancy, and then he needs to look at his own results and fine tune his own model to get returns based on what he's actually doing and what he's comfortable doing. So that's really the gist of what the know the truth about your trading chapter gets into. And some really cool things which you learn in that particular thing once you look at analyzing trades, and how you can analyze the trade to arrive at how many trades will be required to make certain percentage of returns, and those kind of discussions. The next chapter is basically compound money and not mistakes, which is basically a very important message, or which is an important issue with a lot of us struggle with as traders, which is basically you don't want to make the same mistake again and again. And so the typical mistakes which people make is basically they risk too much, or they don't honor their stop, or they buy a stock which has gone down a lot, or they don't have a stock selection methodology, so they keep making the same mistake again and again, or some people flirt from one setup to another. So those are some of the mistakes, and if you avoid those mistakes, and if you create processes, and if you start making conscious effort to not compound the mistakes and really compound the gains, then compounding few gains multiple times is going to allow you to multiply your capital. That is really the message of that particular chapter. And again, it boils down to having processes, analyzing your trades, looking at where to buy, if you're making a mistake then correcting it, and taking steps of eliminating avoidable mistakes is really the message in that particular chapter. Now, the next chapter is basically how and when to buy stocks, part 1 and part 2. Now, this part of the book is also this was discussed in detail in his first book, where there's a lot of details about how to buy stocks, and he has a particular setup which he basically uses, where he's looking for a stock with an established trend basically, and his way of defining that trend has 6, 7 or 8 criterias. And those of you who are the StockBee members, you already know that I already made scans for that, and you can look at the Minervini scans, which basically tries to replicate his trend template in Telechart. But it goes into how to select stocks based on phases, which is a very popular thing amongst stages, which is very popular amongst many traders, where they look for stocks in stage 2, which is like basically stocks which have just started trending, or the stocks which have just come out of a long-term consolidation or periods of neglect, and they've started. And the whole idea behind this stage analysis is that stocks tends to make the biggest move during their stage 2, and then ultimately they top out, and then they get into a declining phase. This is where he discusses his trend template, which I have detailed many times on the site, talking about how to set up the trend template to scan for stocks. The other thing which he talks about is his VCP pattern, which is like a volatility contraction pattern, which is basically some sort of a range contraction which happens before a stocks breaks out. And this is basically for stocks which are setting up after a correction, or which are like going sideways, and how they set up, and how there is a checkout, and then after the checkouts and couple of times the volatility contracts, and from there when the breakout happens, that breakout has a probability of making a big move. And the whole idea behind this VCP pattern is largely to do with the earlier chapters, where you want to eliminate the risk. So his primarily the idea behind this particular setup idea, which is called the VCP, which is volatility contraction pattern, is to try and get in at a low risk buy point in a stock, which boils down to that earlier discussion about risk reward, in terms of if you want multiples of your risk reward, then you have to enter at a right place in a stock's move or a trending phase, and that's really what it boils down to. This is a very detailed discussion, these 2 chapters which talk about how to select stocks, and this discussion was also there in his first book. The next chapter basically deals with position sizing for optimal results, and in this particular chapter he deals with how you should be managing risk, and how should be the position should be sized basically. So some of the key messages are: do not put more than 50% of your account into one position, and basically for optimal position sizing, or optimal for this kind of trading what he's talking about, you should be putting in 25% of your portfolio into one position, with a stop not larger than 10% or even less. So basically what you're looking for is a situation where you can make 20 to 25% gain with a stop, which is 20 to 25% of your account you're trying to put into a position, by building the position in such a way that your stop is 5 to 6%. So you might start with a smaller position and add to the position as it goes in your favor. So this is a very interesting discussion, and that's position sizing kind of a thing, and the kind of stops which one should be looking at. His advice is never to get into a situation where your stop is larger than 10%, and that's like the key to finding the kind of setups or the buy points where you can put the stops like that and not put a larger stop. The next chapter basically deals extensively with when to sell and nail down profits. This was something which was not really discussed in detail in the first book, and he goes into significant details at a granular level on when to sell and nail down profits, and why you should sell into strength, and how you should also at the same time give a room to the stock to have a natural reaction, and then when the stock really makes its move and you sell into the strength and not sell into weakness. So that's really the key to the selling, and it goes into a lot of details about, like, similar to the kind of approach which IBD has in terms of looking at stocks PE and looking at how it has acted after that, and whether it is in stage 3 or whether there is a late stage breakout. So those are some of the things which are discussed in this particular chapter in terms of when to sell and uh, get out of the position and nail down profit. The 10th chapter is basically 8 keys to unlocking super performance, and most of those are something which I'm not going to get into details of them because that's the meat of the chapter. And by disclosing those 8 things, you will, like, basically not get the full thrill of reading the chapter, but basically it takes at 7 or 8 key things which you need to be really focusing on if you want to get better results from your trading. And then the last chapter is basically a discussion with some psychologist about trading and about mindset, which is basically something which goes into issues which are really related to motivation and psychology and other stuff, which is basically not something which I didn't find it as useful as specific things about psychology, because there are a lot of these motivational kind of psychologists who say the same thing, which is not something which I'm a great fan of. But barring that last chapter, if you look at the rest of the content, it is something which you will get insight into a trader who has actually done this for 30 years plus. And you can learn a lot from that book in terms of specific strategies and specific tactical things. So each chapter, and I have read this book multiple times by now, and every time you read, you find something which you can take into your own trading. You may not actually copy exactly the same thing, but you can adopt it to your setups and adopt it to your way of looking at things and make it work for you. So all in all, this is a book which I would recommend to people who are serious about their trading, people who are doing this for a living, and beginner traders might want to look at something which is like, if you want to be successful in trading, especially if you're a beginner or even if you're an experienced, if you're not making a lot of money, is to really study people who are successful and base your trading or model your trading around that. And once you get comfortable and once you have enough confidence and once you have enough good results, then you can basically create your own style, your own setups, and move on from that particular platform to a higher platform. So this particular book gives you significant details to build a platform for trading certain kind of stocks with momentum and growth characteristics. And if your style is really swing trading or longer term swing trading, then you'll find this book has a lot of ideas. For the price of the book, you'll find that multiples of value in the book. And so I highly recommend this book because this book has many trading books have generalities or written by people who don't have a significant experience in trading. As against that, here you can figure out, by the way the book has been written, the kind of things and the kind of setups which have been discussed, the kind of stop strategies which have been discussed, the kind of entry strategies which have been discussed, the kind of processes which have been discussed, that here is a person who's actually done this and who's been in trenches and who knows what he's talking about. So if you're a trader, I would highly recommend reading this particular book.